All right, welcome to Drill Down Earnings. We've got the latest quarter from Salesforce. No longer Salesforce.com, just Salesforce. This is the business story behind the stock on the move, and apparently the name changing as well. I'm Futurum Group's chief market strategist, Cory Johnson, and we've got the latest quarter from Salesforce. An interesting one. The market, of course, just looks at, misses or beats. And yeah, this was a beat. $9.29 billion in revenues, $1.45 billion in net income profit. That's pretty good, and that's better than Wall Street expected. But the growth slowing a little bit. We'll get into that. The guidance really important here. A lot of the sort of financial numbers, because this is year end for them, was important. So they're initiating fiscal year 2025 revenue guidance of $37.7 billion to $38 billion, whatever. 8.9% year-over-year growth. That's a slowing growth rate, and that's not good for this business. They also talked about their operating margins, fantastic operating margins of 20%, operating cash flow of about 22%, and for the first time ever announcing a dividend of 40 cents. If they continue to pay that for the year, that's about 0.5% dividend ratio, which is not very good, but it's something. Big change for this company. Theory says that it opens up to a whole new world of stockholders, different kinds of shareholders, and that had the stock maybe up a little bit, then it went down a little bit, but we'll get to the stock in a second. Let's look at the growth for the business top line. So top line, fantastic business, $9.29 billion in revenues, as I mentioned, but a growth rate of just 11%. Growth has been steadily slowing down for this business, really for years, and you can see that in recent quarters. The backlog, also good, steady for this business. The backlog is things that customers say they're going to spend on. They've billed for these things, or they've started to bill for these things, growing at about 12%. So that suggests that the growth's going to be there over time, that the revenues are going to grow at the pace that they're suggesting, at least. But when the numbers came out, the stock traded off. You can see it in the chart where the stock was trading at about 300, fell all the way to about 280, and even a little bit lower initially. But Marc Benioff, that CEO, he was managed to jawbone this thing up right back to where it started the quarter in the conference call. As the executives on the call were talking about all the things, that the excitement they're seeing from customers, different from what we've seen from companies like Palo Alto Network, where they're saying their customers really want to spend on Salesforce. They see some excitement on the customer level, and they think that AI's, shocker, is a big driver there. If we look deeper into the headline numbers, Benioff talking specifically about AI possibilities and how it really is something that's still coming out of the pandemic, getting that stock up and getting some excitement up over the course of the conference call. Here's CEO Marc Benioff.
There's so many stories. There's going to be so many more stories where these tools all of a sudden really start to deliver much more productivity, better customer relationships, and higher margins. CEOs get that. I think that is driving the 180. Obviously, we're also in the third phase of the pandemic. The first phase we all went through together. It was horrible. It was my first pandemic. I had never been through anything like it. Then all of a sudden we were in the post-pandemic, where we were in this crazy interest rate and inflation environment. Now we're in the third phase, post-pandemic. And in post-pandemic, things are just better, not just because we're going through this technology surge, but because all this other stuff is behind us and we're in a new normal, and people know, hey, we need to invest to grow. We need to invest in technology to grow.
So yeah, putting it in context of where we are post-pandemic, and saying that that's going to be a driver here in the year going forward. The numbers he's suggesting aren't fantastic, but the excitement sure is, Marc Benioff. So what's it all mean? And what's one number that tells us a whole lot? I'm going to show you a pocket of really, really strong growth of this company with the Drill Down Earnings Bite right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Here's your drill down earnings takeaway from Salesforce most recent quarter. The company reporting a really strong quarter just from a top line basis. of $9.29 billion in revenues, up 11% on a year-over-year basis, but guiding for the rest of the year at less than 9% growth, suggesting that things are going to slow down just a little bit, as they have been slowing for a while. But I want to bring you to the bite, one number that tells us a whole lot about Salesforce, and that's their data business. Now they're calling integration analytics. That's Tableau and MuleSoft, two big acquisitions for this company. Those are growing really fast. The integration analytics business, they used to call it data, growing at 21%, well above the 11% of the rest of the company. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check us out on all the socials, Instagram, TikTok, yes, on YouTube. Follow me at X at Cory TV. Drill Down Earnings, part of the 6-5 Media Network.